Good morning, everyone, and welcome to the Home and Finance Show. I'm Janice Bradley with JB Real Estate Consultants and my co-host,
Diana Rice Wilkerson with Fairway Independent Mortgage.
Our show is designed to help educate and help with home ownership because it's the easiest way to create wealth. So on with the show. Diana, I know we have an exciting guest today, and we are so glad that we have the opportunity to learn more.
Absolutely.
About this particular subject.
Absolutely, and that subject is called reverse mortgages. And you guys, you know, if you keep living, at some point we're going to get older. And there are a lot of older people today. This is, I think, the fastest growing segment of our population. And a lot of people do want to age in place. They do want to stay home. And yet, we know at that time in our life, that's when we have the least amount of income, possibly fewer assets. So we're going to be talking about the reverse mortgage product, which is an excellent product and a very safe way to tap into the equity that's in our homes to help us improve our quality of life and our financial stability. So joining us today is our guest. His name is Mike Dariani. We can just call him Mike, Mickey D. And he is a trainer on the national sales team of Fairway Independent Mortgage, and he is my coach. So Mike, thank you so much for joining us today.
Thank you for having me. I appreciate it.
Hey, you know, we are excited to talk about this particular subject, and we don't have a whole lot of time because we're on TV. So we want to get to the nuts and bolts of it. First of all, I'd like everyone to know that I am trained in doing reverse mortgages and have done a few now, and I absolutely 100% love it, love serving this part of the population. Mike today is going to help me explain to you the components, key components of the program, and kind of dispel some of the myths, because we understand that those myths are keeping people from maybe looking and using this product. It just makes us feel uncomfortable. We do believe that if you're uncomfortable, you shouldn't do it. So our goal is to educate you, as Janice said, that's why we do the show. Our goal is to educate you so that if you feel at the end of this show that this is a program that may benefit you, that you might be willing to make that phone call to me and we can talk further about it. So Mike, let's start with, you know, some of maybe just kind of briefly describe the program and then talk to us about some of the horror stories associated with it.
Sure. All right. So as Diana said, my name is Mike Dariani. I work with the Fairway Reverse corporate team. I've been in the industry for about 8 years now, and pretty much what I do is train loan officers around the country on how to present this to seniors. Our motto here at Fairway is we're trying to change the way retirement is done in this country. And we are absolutely doing that. So I personally like to think of this loan as not a reverse mortgage, even though that's what it is. I think the better term would be a retirement mortgage.
I like that.
A retirement tool. So, you know, anyone that qualifies, let's say if you're over the age of 62 years old and you have some equity in your house, you know, anywhere between 30% or more, it's very possible you might qualify for this loan. It's very possible that you might qualify for this loan. What this loan will do is possibly eliminate your mortgage payment and give you more cash flow throughout your retirement. So you always can live in your house. The FHA insures these loans, so you'll never have to worry about having to vacate the home or being upside down or anything like that. What you're going to do is you're going to tap into the equity that you've, you know, earned in your home, either by the house appreciating or by you making payments, and let that equity pay you cash. Instead of having so much equity, you're going to have more cash flow throughout your retirement. So again, you can live in the house for the rest of your life, both you and your spouse. And when that time comes to an end, hopefully a far long time away, the kids, the heirs, whomever it may be, will have options on whether they want to purchase the home, sell the home, and cash in the rest of the equity, or they can simply just walk away and they'll have a year to decide when that time comes. So again, to reiterate, the biggest thing would be, if you're over the age of 62 years old and you're tight on your monthly budget, if you get your Social Security and your pension or your paychecks, whatever it may be, and you find yourself making $1,000 or $1,500 mortgage payment, and you look in your bank account and you have $300 left at the end of the month because the majority of your income is going towards your mortgage, this should be something that you should consider, because it will allow you to do the exact same thing that you're doing now and save a tremendous amount of money per month, per year, and for the rest of your retirement.
Excellent, excellent, excellent. I love the reference to retirement mortgage.
Me too. I wrote that
down. That helps people, because the whole notion, the name itself kind of draws a little bit of confusion. So retirement, we get that.
Yes.
Mike, talk to us, because the reverse mortgages have been around for a long time. When did they start? But it wasn't HUD, it wasn't FHA.
Way before my time. I think HUD came in, don't quote me on this, but it's been, the late 1990s. I'm sorry. Late 1990s when they came in. I know they've been around for decades, but they haven't been fine-tuned like they are now, where HUD is insuring them and they're being fully underwritten. But as long as you have equity, there's always a way around to possibly get approved. So, right now, for the last few years, and especially right now, the amount of money that you can borrow in your home is at a pretty good percentage right now today. And interest rates, most of the ones that I've been looking at are ranging between 3 and 4%, depending on your qualifications. That's kind of what you're looking at right now. So, when you talk about interest rate on a reverse mortgage, it's a factor, of course, in any loan, but in a reverse mortgage, it's the percentage of where your balance will increase, because in a reverse mortgage, you have a loan balance that increases slightly because you're not making a payment. The equity is making that payment for you. So instead of, here's a good comparison. Let's say you have a $100,000 traditional loan that you're in now, and you're making payments on it. Well, in 10 years, you make all these payments, your balance might be $80,000. In a reverse mortgage, you're not making the payments. So in 10 years, your balance might be $120,000. But in those 10 years, you've saved your mortgage payment every month. And let's hope the appreciation, the value of your home has gone up as well to offset some of that interest that you've accrued.
Excellent.
Very well explained.
Yes.
I like that. So what would you say, Mike, would be the most fearful aspect of this that people are perceiving, or the most misunderstood about this particular program?
I would say it's, can I lose my home, or are my kids going to be stuck with what I have to pay? And both of those questions, the answer to that is no. The only way you'll lose your house in a reverse mortgage is if you do not pay your property taxes and homeowners insurance. So, and for homeowners insurance, they might actually force place that on your home if you didn't, pay that. But if you have a traditional loan, or even if you own your home free and clear, if you don't pay your property taxes, there's a chance that you could lose your home. The reverse mortgage is exactly the same. And then, so the answer to that is no, you won't lose your house. And then another fear would be, are my kids going to be stuck with the balance? Well, if they have interest in the home, then yes, they'll have to pay the balance off. So, I'm sorry. Busy day, my apologies. So let's say, you have, your kids do have an interest in the home. The heirs do have an interest in the home. And, there's a balance of $100,000. Well, they can sell the house. Let's say the house is worth $150,000, and they can cash in the other $50,000. Or let's say the house is worth just over $100,000 and there's not much equity in it. they can simply just walk away. This is a non-recourse loan, so you absolutely do not have to pay this back. That's how the reverse mortgage is set up. So that's basically the two biggest fears from any borrower that I've had challenges with in the past.
Okay, so you mentioned if they have any interest. Now, were you talking about the fact that their names might be on the deed? Because that would mean some home ownership. I don't know what I missed there.
Well, okay, so to do a reverse mortgage, if you're a homeowner and the kids are on the deed, they would not be allowed to be on the deed moving forward. It's
Okay.
only spouse, husband and wife, or spouse, who's 62 or older. If you're married to, if your partner is under 62, they can still be on, and they would be considered a non-borrowing spouse. They could live in the house for the rest of their lives as well. They just wouldn't have access to any funds in the loan.
Gotcha.
So if a child, let's say in the will, I have a reverse mortgage and I'm no longer with, I'm no longer here, and I want my child to have my house. Well,
Okay.
in my will, it'll say that my child gets the house. Then my son will say, okay, look, I'll call the reverse mortgage servicer and say, okay, what's the balance on the home? I'm going to see what the value is and see if it's worth my time to sell it and cash in on the
Walk
rest of
away.
the
That's
equity.
by the interest.
Yeah.
Okay,
Yes.
got you.
So, and Mike, let's kind of dial back and, because I think initially when reverse mortgages started, and I do think this is an important distinction, it was not HUD, it was not FHA.
It was
so
not
a lot of the
FHA.
horror stories that people heard can be attributed to those loans.
Well, I'm sorry. Were you done, Diana?
I just wanted to briefly say, we're talking about an FHA loan with a reverse. We're doing FHA reverse only.
Right. We
Right.
are. We have proprietary products as well that aren't FHA for, let's say condos that aren't FHA approved,
Okay.
or jumbo loans. But for FHA, they came into play because they understand that seniors are their own class and they need to be protected.
Yeah.
When these were being done back in the day, many of the seniors that were doing this loan, if their spouse weren't 62 and they went ahead and did the reverse mortgage, the spouse wasn't protected. And FHA came into play and they stopped that rule right away. And now the spouse is always protected. So in order for you to do this loan, you actually have to start off by taking a counseling class. And this is a third party representative that will go over the details of this loan so you completely understand it, and the lender is doing their job explaining it to you. You have to actually do this counseling class, sign a document that says you understand, and then you're able to move forward. So FHA has definitely stepped in to look out for the senior class to make sure they're not being taken advantage of by a lender, and they understand what they're getting ready to do. Because the borrower has 100% ownership of this house, but the equity is slowly depleting as they continue with the loan.
Excellent. I know, and let's talk about let's help people identify whether or not they would be a good candidate for the loan.
Okay.
And I know that this summer I had the pleasure of doing a refinance for a lady who had lost her husband last year. And there was still a mortgage on the property. And the husband, when she lost her husband, she also lost his income. And so she only had Social Security and she had the mortgage. And so we were able to do a reverse mortgage for her and eliminate that mortgage payment. That was one of the examples that you mentioned earlier. And she is very, very happy. I mean, it was close to $900, a little over $9. So that actually put $900 pretty much back in her pocket. And she's also set up a savings account to take care of her taxes and insurance. And it was either do that or sell the house. And number one, it was too soon for her to sell the house because he had just passed a year ago. It was just, she loves her house. She wants to stay in her house, been in her neighborhood for like 40 years, and she just didn't want to do that at all. And so it was too soon for her to sell the house. And she also, though, no longer has a mortgage payment. So now she can afford to stay in her house.
Wow.
So that's
How did
just
she
one
hear
example.
about the loan?
Yeah.
She heard about the loan through our financial person.
Great.
Yes, which I thought was a big coup because this particular CPA, she's ours, Janice and I used the same one.
All right.
And I had talked to her about reverses before, and she wasn't that hot on them. But when she was working with this lady, she said, I think I have, and she actually, this was a lady, Mike, who had went to her bank to thinking she could refinance and lower her payment. And the mortgage company was willing to do that, but her CPA said that's not really going to address your issue. The reduction was only going to be about $200. And she said that's really not going to address your issue, which I thought, because I don't know that the customer would have responded to me directly, but this came from her CPA. She said, this is the program that I think will definitely, and this is the person I want you to talk to.
Absolutely. Well, what you just explained is the number one candidate for a reverse mortgage.
Okay.
And so here's how I look at it. If you're age 62 or older and you are looking to refinance, take out a home equity loan, do home repairs, whatever it may be, your first option should be this loan. Is it always the right option? No. But I will tell you this. Why go into a 30-year refinance at the age of 62 or 65 or 70 and commit to a payment for the rest of your life? Because that's what you're doing. If you have the ability, let's say you want to do a cash out refi and you need $30,000 to do some upgrades in your home, or you want to put a pool in or whatever it may be. You should look into a reverse mortgage first, because if you qualify and can get the $30,000, you're going to be able to eliminate your current mortgage payment and have possibly more than that $30,000 sitting there in a line of credit that you can access as you want. You don't have to take $30,000 at close. You can take $1,000 a month or $15,000 now, $15,000 later. So it's great for your example, Diana. You know, a widowed individual who's now living on one Social Security check and not two, and they need some financial assistance because that's what sometimes people forget is, okay, look, we're both on Social Security now, but our Social Security checks are $3,500 combined. Well, you got to remember, when one passes away, it's not going to be that. It's going to be the most of the two. So it might be 60% of that. So if you do a refinance, you're going to leave your spouse with one Social Security check and a mortgage payment. Yeah. This is why I refer to it as a retirement mortgage.
I like that.
Yeah, because you're eliminating that payment and you're able to pull out some money on top of that as well. So I look at it as, you know, if you're tight on monthly income, if you want to do some home repairs, if you want to just go enjoy your retirement and travel and eat good and drink good wine, whatever it may be, this is something that you should look into.
Mike, share with us when you're talking about qualifying. So just kind of give us some examples on qualifying for this retirement mortgage.
Absolutely. So one of, whether you're married or an individual, someone in the family needs to be 62 years old. If you're 62 years old or older, that's the biggest qualification right there. That's how you qualify for the age. Then, you know, there needs to be a certain amount of money that's coming in. It's called residual income. The residual income needs to be somewhere between $530 and $800 some dollars for a married couple. Residual income means after you pay all your bills, do you have that amount of money left over every month? And we're not including the mortgage payment because you're not going to have one.
Interesting.
So 9 times out of 10, you're going to qualify for residual income. The biggest thing that they changed in 2015 is, let's take a look at the last 2 years of your credit history. Have you defaulted on anything? Creditors, mortgage, taxes, things like that. If you have not defaulted, that's better than an 800 credit score. I mean, that's one of the biggest things that they're looking at. Have you paid your property taxes on time, your mortgage, and your credit cards? Have you paid those things on time? If you have, you're in good shape. If you haven't, we need to dig a little deeper and find out why. And then there's still a possibility we can continue with the loan as is. If there are a lot of delinquencies in the last 2 years, what they'll do is set aside your property taxes and insurance for the remainder of your life, which may not allow the loan to make sense, but that's something we look at a case-by-case basis.
I have a client right now who I am working with who just got into a financial bind because of COVID, basically. Self-employed, but has a lot of equity in the property. And so we are still able to do the mortgage because we're doing the set aside for taxes and insurance, which they are pretty happy about, quite frankly. And still has a line of credit, and they had a very small mortgage on their property. They're able to, what I love about this situation is they have a lot of equity in their home, and they are much older. And the biggest concern for them was losing their home after all of these years. So the reverse mortgage is taking care of paying off the mortgage, setting aside the money for the taxes and insurance, and still giving them a very nice line of credit. And it is like, these guys are just over the moon about it because they had no other, it's not like you're at an age and stage where you can go out and get a job or they're not physically able to work. If you're younger and you run into a financial crisis, you may have some other options. But as you get older, you just do not have those options. So once again, it's a loan that is there to kind of take care of a lot of issues and then walk away with no monthly obligation.
So Mike, what kind of fees can one expect on this type of loan?
Well, so for a reverse mortgage, the fees are going to be higher than a traditional loan because there's more of a risk the lender is putting forth, with this type of loan because there's no payment. So you've got, you have immediately off the bat, FHA is going to charge 2% of your appraised value. So if your home appraises at $300,000, there's going to be a $6,000 fee, $100,000, $2,000 fee, and so on. This fee will be rolled into the loan.
Okay.
So nothing is out of pocket. Depending on your lender, you may have to pay for the appraisal out of pocket, but that's about it. And then you have an origination fee by the lender, which can range anywhere from, $2,000 to, $2,000 and up is pretty much the standard, I would say, depending on the value of your home and the type of work that the lender is putting in. And then you have your third party fees, which are your appraisal, title, counseling, those types of fees that you get with any loan. So the fees are a little bit higher, but that being said, the majority of them are rolled in, and the amount of money that you're saving each month now that you don't have a mortgage payment is going to offset those fees in a matter of time.
Absolutely.
Mike, talk to us about the reverse mortgage being used with a purchase property. And we have about 3 minutes left. So I definitely want to get this
That's
in.
a very good point.
So I got a 3-minute elevator speech right here, right? Okay.
Okay.
Probably like 2.5.
All right. So long story short, if you want to do a reverse for purchase, let's say you're buying a $200,000 home, and your options are you want to do a traditional loan and put 20% down and have a payment for 30 years, you can do that. You'll end up spending $400,000 on your house for the next 30 years. In a reverse for purchase, you put 40 to 60% down, $80,000 to $120,000 down on this $200,000 house. One lump sum down payment between 40 and 60%. You have no payment for the rest of your life. That's it. It's almost like buying the house for half price if
Yes,
you
I
have
like
that down payment.
Very well. Mhm.
That's pretty much it.
And I love it because there are a lot of seniors who have homes that are pretty much either paid off or possibly paid off, and they want to downsize, but they don't really want a mortgage payment. They don't necessarily want to use all of their net proceeds to buy another property. You know, they want to hold on to some money, understandably so. So this is where you can have your cake and eat it too.
Absolutely. Great way of explaining it. Diana, you should be doing my job.
Hey,
She'll get there. She'll get there.
First of all, thank you so much for joining us today. We just appreciate you, want you to come back at another
Will do.
time. We'll because this is a product that's not going away, guys. I mean, we're going to be here for a long time, hopefully, and we want to stay in our homes. We definitely want to stay in our homes. So, Mike, thanks again, and I will be
you.
in touch. Appreciate you.
Have a great day.
Thank you both. Enjoy your day.
All right,
You
take
too.
care.
Bye-bye.
So again, Janice, this is the new hot
It is.
product. I mean, it's new and improved because, and one of the major things was before, and I do remember this, say your spouse was 55 and
Exactly.
you were 62, the spouse could not be on the mortgage, which meant
I remember
there was
that
not
changed.
that natural flow of ownership.
Right.
And so FHA's come in and done a lot of things. That in FHA, one of the things with the reverse mortgage, even though for people who may still have some concern, be assured it is a safe product.
Exactly.
It's an FHA insured loan, guys. So it is safe.
And Diana, most of the time is, if I understand, is that they, if you have children,
Yeah.
they advise
Yeah.
a family consultation. Is that correct?
That is exactly right. And there's more to come. Thank you for joining us today. I'm Diana Rice Wilkerson with Fairway Independent Mortgage.
Janice Bradley with JB Real Estate Consultants.
Have a wonderful day.
Has it been a nightmare trying to buy, build, sell, or refinance a home? Then wake up to the Real Estate Dream Team of Janice Bradley and Diana Rice Wilkerson. This dynamic duo provides you with up-to-date, honest information, credit counseling, financing options, and more. Don't listen to haters who say, you can't own your own home. Yes, you can. With Janice and Diana, call now and listen for them on the Home and Finance Show, Saturdays, 1 p.m. on WTLC AM 1310 The Light.